Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Gold is climbing to heights we haven't seen in decades. At the same time, the crypto market cap is under pressure, coiling like a spring ready to explode. And amidst all this, whispers are growing louder. Could the United States secretly be preparing to use gold or cryptocurrency to tackle its staggering $35 trillion national debt? At the Eastern Economic Forum, a Russian economic advisor openly claimed that America is orchestrating a plan to manipulate both gold and crypto markets to reshape the financial global system. It sounded like conspiracy theory, but when you start running the numbers, it starts looking more like possibility than speculation. 35 trillion is an almost unimaginable number. To put it in perspective, that's over 100,000 for every man, woman, and child in the U.S. And yet the U.S. has cards other nations don't. For example, America holds one of the largest official gold reserves in the world. We're talking roughly 8,333 tons secured in Fort Knox and West Point. But here's the twist. On books, the government values gold at just $422 per troy ounce. At current trading, prices of around $3,700 per troy ounce, a revaluation would instantly transform the U.S. gold reserves from a mere $11 billion on paper into over $1 trillion in value. Let that sink in. $1 trillion in real value. Push it further. What if gold hits $10,000 per troy ounce? That's $2.6 trillion. Almost 8% of the national debt. That unimaginable happens and gold reaches $124,000 per troy ounce. The U.S. could theoretically wipe out its $35 trillion debt with gold alone. Historically, gold has been revalued during crises, like the 1930s confiscation and 1971 when Nixon's gold window closed. So the concept isn't as far-fetched as it seems. Now, think about Bitcoin for a second. Gold is tangible, but cryptocurrency introduces an entirely new dynamic. Bitcoin alone cannot erase America's debt. For perspective, if the U.S. somehow controlled all 21 million Bitcoin in existence, each coin would need to hit 1.75 million. But here's the clever part. The U.S. doesn't need Bitcoin to do all the heavy lifting. By issuing Bitcoin-backed bonds, creating buying pressure, and letting the market react, the value of Bitcoin in reserves could increase multiple times without reaching impossible levels. Early adopters and institutional investors would likely jump in and accelerate the cycle. Bitcoin is decentralized. The U.S. can't control supply, but XRP offers optionality. President Trump floated the idea of a strategic crypto reserve, listing XRP first, followed by Solana, ADA, and then Bitcoin and Ethereum. Ripple, the company behind XRP, has been positioning itself strategically. They applied for a national banking charter. They launched a stablecoin, RLUSD, partnered with BNY Mellon for reserve management. XRP could act as the connective tissue for a tokenized global financial system. Hypothetically, if the U.S. controlled all 100 billion XRP tokens, each would need a value of $350 to cover $35 trillion. With only 40 billion escrow tokens, each would need $875 amount, totaling a market cap of $87.5 trillion. Enormous? Yes, but far more feasible than Bitcoin achieving the same leverage with current holdings. So gold, Bitcoin, and XRP all affect wealth differently. Gold, broadly held, revaluation benefits hundreds of millions globally, leading to rapid consumer spending and massive inflation. Bitcoin, well, concentrated among whales and institutions, wealth effects would largely impact asset markets like real estate and private investments with slower general overall inflation. But here, XRP, extremely concentrated. Sudden revaluation would create a new elite almost overnight, reshaping global wealth hierarchies and potentially political power forever. So let's look at geopolitical chessboards for a second. This isn't just finance, it's global strategy. China holds massive Bitcoin reserves and historically controlled mining operations. El Salvador adopted Bitcoin as legal tender. The UAE and smaller nations, well, they're exploring sovereign crypto holdings. But XRP differs. U.S. leverage over Ripple could give America direct control, but it risks alienating other nations. If they feel excluded from this system, gold is universal, but XRP is programmable, flexible. A potential hybrid strategy could use all three assets, spreading risk and global impact. US-backed stablecoins are already popping up demand for treasury instruments. Every minted coin effectively funds US debt, showing crypto's integration into real-world debt mechanism. A strategic expansion could allow the US to scale collateralized new debt and pull liquidity from global crypto markets, all while increasing legitimacy for crypto as a mainstream financial pillar. But regulation is critical. XRP has battled the SEC for years, but clarity could unlock massive institutional adoption. History proves that confidence drives capital. Once markets perceive legitimacy, adoption accelerates. But the timing is key. Wealth is rarely built at market peaks. The strategic advantage lies in accumulating during uncertainty, understanding technology, monitoring regulatory moves, and positioning early. XRP represents an asymmetrical opportunity, limited downsides due to established networks, high upside through systematic adoption. Okay, let's look at some historical context and analogies for a second here. Stay with me. 1933 gold confiscation, government reset the financial system overnight. 1971, Nixon shocked. He closed the gold window, rewired global currency. Today's 35 trillion debt crisis dwarfs those moments. And the tools, gold, Bitcoin, XRP, offer modern-day equivalents for radical resets. Historical precedents show that governments act decisively when states are extreme. So let's fast forward 5 to 10 years from now, okay? Digital currencies are now mainstream. Tokenized assets and blockchain settlements dominate. XRP, with legal clarity and institutional integration, could serve as a backbone for global financial systems. So early positioning now could yield life-changing gains for investors who understand this shift. The 35 trillion debt is a problem the U.S. can't ignore. Gold, Bitcoin, XRP each offer unique levers for a potential reset. The impact on wealth, geopolitics, and global finance is immense. The real question is this: do you want to watch from the sidelines as the future of money is built, or do you want to be part of it? History favors those who recognize transformative shifts early and act decisively. XRP is one of those shifts. I want you to comment below which asset do you think the U.S. will leverage first. If this opened your eyes, smash that like button, ring the bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer already unfolding. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic.